want to bring in our next guest. We have Chris Robinson joining us from TJM Institutional Services here this Monday morning. Chris, what's got your blood flowing as you get things started here this Monday? I can't imagine it's the U.S. dollar hanging out around 103. Actually, now that I think of it, maybe it is, because it's right at that level you look for, that halfway back. We're in the middle of the range that we've established all year.
Yeah, and I think that's going to be very sensitive to what people perceive the 10-year is going to do. We are kind of at a reset point, halfway back, and I'd watch it. If this level does not hold, then probably the next level comes in down around 102.5, 102.30, and that may be where we're going. The dollar, most currencies tend to trade like a battleship, not like a jet ski. So once that train gets going, it's something to watch. So, the trend definitely is lower since last year, since we had that multi-year high, and we'll see if we can find some support here in the dollar. But I think the number one thing that's pushing it is the idea that the Fed is done. If the Fed is done, then I think you'll see the dollar continue to slide lower.
We're looking at a chart there, Chris, in terms of the U.S. dollar, and sort of feeds into what I've been talking about quite a bit. Markets have been providing a fair amount of intraday opportunity, but not a lot of real follow-through trend-wise one way or the other. To your point, taking a look at the U.S. dollar, here's the move that Chris just mentioned off the highs that we saw a couple years, or last year, I should say, 114, 115, and the move lower, but how we've been a bit more sideways since. And here we are again in the middle of the range that we've been in basically all year, 107 down to 99. Chris, is this a market that's waiting for more information? And if so, what? I mean, the Fed, one could argue data, or do we lean to some of the other foreign currencies possibly?
I watch other foreign currencies. I think a lot of energy, correctly so, as in your previous guest discussed a little bit of it, it's concerned about what's going to happen in the Mideast. If there is some increase in tensions, typically it's actually friendly for the dollar. Historically, if there's
as a safe haven trade.
Safe haven trade. Mm-hmm. So at the end of the day, a lot of people might be writing a lot of articles about de-dollarization around the world, mm-hmm. but when push comes to shove, people still come to the dollar. So I would watch that. And also, too, we didn't really want to talk about gold this morning, but gold is approaching, the fantasy land. We're, $2,000. Here we go. So I think that's something to watch. And the bottom line is, now we're done with Thanksgiving. We've got to get through the next 6 weeks of holiday markets, and those can be dicey. So by dicey, I mean thin volume. There's usually a lot of liquidity in the openings and the close. The rest of the time, it tends to dry up. Why is that? Because most people, if they're up money this year, you tend to back off and not take big positions because you don't want to booger up your year, the last month of the year.
Chris, does that lend itself to maybe some more sideways action here in the yen? This is a product that had been in a very well-defined trend lower, in many ways supportive of what we'd seen in the U.S. dollar back up to that 107 handle. And more recently here than not, over the last couple of weeks, kind of losing some of that momentum lower. Taking a look here at the Japanese yen, I guess I'm wondering, is this one of those products in terms of some of those other foreign currencies to watch in terms of this really well-defined trend that had been playing out throughout the year?
Yeah, well, the yen's just getting hammered. I mean, we're at or near that 33-year low. It's a key level. Every bull and every bear out there likes clearly defined levels. So that may be a level that we continue to fight on moving ahead. But that's huge. And again, there's a perfect example of how currencies trend. They go, they go, they go. The central bank in Japan has, obviously had their hands full over the past year and a half, 2 years. I think that the fact that the EU and the United States are kind of talking a bit more dovishly may help the yen. But again, that's a pretty simple spread to look at if you're looking for those types of relationships. Watch the dollar-yen spread. As the dollar weakens, will the yen continue to find some footing here? It's a pretty simple one-off trade. And now that we've got that 33-year low in there, where your worst case scenario is. So it's a good setup, bull or bear. That's a key level to watch. And that may be a trade to watch for the next 3-4 months. A lot depends on what happens in the Mideast. A lot depends on what happens if the Fed is truly done hiking.
Here's a look at the last 10 years of weakness we've seen throughout the yen. We're talking about from, again, well above, we're talking, what, 130, 130, 150. Taking a look here at, I wanted to talk about the euro currency, another product that's been kind of range-bound, stuck, and I'm wondering, similar to the pound, the focus here, I'm wondering if it's going to shift to, well, the value of one's currency being more tied to who's going to have to hike more than it's going to be now more tied to who's going to have to cut first or who gets to cut first. It seems like, again, the shift, the attention has shifted quite rapidly.
Yeah, I joke. I'm sure there's a group text out there with all these central bankers on it. I'd love to take a look at that. But yeah, I think as the U.S. decides to at least stop hiking, it gives everybody else the playbook. So that's going to be something, again, it gives you, now we've got clearly defined levels. That's one thing you look for as a trader. We have clearly defined levels now to work off of as we move into the next 6 months. So if you have a thesis that, something's going to happen, at least you have got levels to watch in case your thesis proves wrong. So that's the one thing I like about these. If the markets are turning, you know what levels to hold. So yeah. I think it's a good opportunity out there, especially for somebody that doesn't want to day trade. If you're going to sit in front of the screen all day, God bless you, that's fine. But if you're looking for something where, like, where can we do something for the next 3 months, 6 months, this may be the time to start looking at that.
I like that, because when you have these really well-defined parameters, we've been in range-bound trade for months now. You've got a easily identifiable upper, a lower extreme here. So maybe you do wait for a breakout and look for that bigger picture, that longer-term trade here. Good advice. Appreciate you joining us here, and thanks for sharing part of your Monday with us. Chris Robinson from TJM Institutional Services.